Hi, this is Vlad with TradeSpoon, and I'd like to go over the earnings season. Now that the earnings season is widening out and majority of the companies have already reported their earnings, 65% of these companies have beat their earnings estimates based on their revenue and based on the lower projected estimates by the analysts. Right now, all of the traders have their eyes on new federal chairman and the interest rate that will be going forward. Obviously, lower interest rate will help to continue a bullish environment in the stock market, and continuing repurchasing of the bonds and what is called a quantitative easing will help the stock market going forward. What we'd like to cover for the past 2 weeks on everybody's mind is the new microblogging company that went public called Twitter. Twitter allows users to have millions of users and disseminate information in very small pieces of bytes. And the company went public last week. It trades about at $4 billion, which is 25% of what the Facebook value is, and it's highly correlated to the social media group. So if you follow the social media group in all the ETFs, you will see that Facebook is very highly correlated to the moves in the social media. So how do you take advantage of that? Obviously, Twitter, because of so many hedge funds and institutional investors want to participate in this new IPO, the volatility of the stock is quite wide. And since the volatility is wide, you will see that the stock is trading in a very wide range. So how do you capture that wide range? And how are you able to trade both on the upside and on the downside of the stock as it moves in between these wide range? Options become increasingly important in the strategy, and especially with the stock that has a very small short interest, and it's very hard to borrow the stock at the current levels. You have to pay 100% of the value. To avoid these margin requirements and short hard to borrow requirements, you can utilize options. So increasingly important becomes buying puts and calls. Since the volatility is high and the stock is trading in a wide range, I would recommend to sell the volatility. And what you can do, you can do what is called strangles, where you can do short input and short call and find the range in which stock it trades. Or you can actually be more conservative and define a well-defined and trade a well-defined bet by utilizing iron butterfly and iron condors. They're very popular. These are more complicated strategies, but they allow you to trade in the range of the Twitter, and they allow you to sell call spread and sell put spreads in a defined range the way you can see the stock is trading. If you need more analysis, you can find them at tradespoon.com, where we analyze stocks for technical and fundamental analysis, and we actually find a well-defined range for the Twitter and many other stocks. Thank you.